Handle Your Business, a weekly podcast discussing a little of this and a little of that. Handle Your Business appropriately blends serious topics with fun topics, all in an effort to help you have a good or better life. So join me, your host, Lady Lashley, and some amazing guests every Sunday at 5 p.m. to explore everything from financial management to dealing with relationship challenges. Put it in your calendar every Sunday from 5 p.m. Tune in to Handle Your Business for a very helpful half hour to get you ready for the week ahead. For more details, follow at Lady Lashley TT on Instagram and Facebook. Handle Your Business. Welcome to another episode of Handle Your Business with yours truly, Lady Lashley. Today I have with me Jessel Alexander, an insurance agent, insurance salesperson, basically an expert at insurance. And on this episode, we are going to be discussing understanding insurance. Hi, Jessel.
Hi, good afternoon, Lady Lashley.
Thank you so much for joining me. This is a topic that I am very hot and cold about. And like I was telling you before, I have come to a point where I recognize, in spite of the parts that I'm not so happy about, the reality of the world that we're living in is that for many of us, insurance might be a real, genuine need for us to get by during the course of our lives. COVID may have brought that to the front for many of us as well. So I want us to spend the time on this podcast episode discussing four main aspects of insurance: life insurance,
right,
annuities or pension plans,
right,
health insurance, and critical health insurance.
okay,
Right. And of course, for those of you all listening to this podcast episode, I am not going to be the one explaining any of this. We have the insurance expert who is here, Jessel Alexander,
thank you.
and she will talk to us about each category of insurance. Let's start with life insurance. I think that for many of us, when we start working, that might be the first type of insurance that we encounter, even though we may never purchase it, because some agent is usually passing around or trying to sell you life insurance, right? Most of us have no clue what it is about. Sometimes we sign up to get the agent, off your back, or you just that kind of thing. But talk to us about life insurance. What is life insurance exactly?
Basically, life insurance is insurance that is purchased to cover the risk of death. One of the certain things that we know in this life is that we will die, right? So life insurance covers the financial aspect of the loss related to death. And many persons don't see it as necessary or important. But at the end of the day, once we start to work, as you say, you start to work and the insurance agents are passing around, because we then have assets or even little things that you own that have a financial component in it. And you live in a house with probably your parents still. But when you start to work, your parents will say to you, well, you need to be contributing home. So immediately, if you should pass, whatever finances you were contributing to the home is lost, right? So life insurance is one of the tools that can replace family income.
Oh.
So yeah, that's what it is.
I never thought about it like that. I actually always thought that life insurance had more to do with when you actually have children, like your own biological children or dependents, and you wanted to provide for them after you've passed on, providing, of course, that you pass on before them, and particularly when they're younger people. But you're putting a completely new spin on it for me, in terms of it also can be providing for a sustained contribution to your household expenditure when you're not there.
Very correct.
Wow.
And the perspective that you have is the one that most people have. So you would hear young people saying, I have no children, so I don't need life insurance. but you're living at home. You're paying the light bill. Your parents might say you need to contribute. So you're paying the light bill. If the grocery bill for the household is $3,000 a month, you're contributing $1,500 upon your death. That is monies that would no longer be there for the family to live by. And it creates a hardship. It creates a hardship, a financial hardship. So the concept of life insurance, one of the main concepts is to replace family income. Because whether we accept it or not, once we start to work them in contributed, then those persons depend on it, right? Depend on it. So it's not only when I start to have my own children and I have my own family, and then I should start looking for life insurance.
Right.
So that is one of the times that, which is why the insurance agents now, they're passing around from an early age, right? The other thing about life insurance, many people don't know that life insurance is actually bought with your good health and paid for with money. And what that means is you have no guarantee that when you are ready to buy insurance, that you would be insurable. The average younger person, all things being equal, is in good health and so forth, so they more likely will qualify for life insurance. But you reach 38, you now start a family, and you're looking to get insurance. There is no guarantee that you are insurable at that age. And sometimes, depending on the purpose of the insurance, it could hamper a lot of the things that you want to do if you don't have it. So life insurance is a good investment itself.
Wow. Well, I'm genuinely learning something here. I know that for some life insurance policies, because again, I could just think back to maybe 20 years ago when I was much younger and just entering the workforce. One thing that an insurance agent said to me in trying to sell me, I think it was life insurance, that particular coverage had something they call a silver lining. So basically, for those of us who are saying, well, mine are not true, and why buy an insurance, you know, for when I die, the catch, I think, with that is that the person was saying, when you get to a particular age, then you can get a lump sum payment to yourself. Can you speak in general about what that is?
Right. So there are different types of life insurance policies, right? So we have policies that would accumulate a cash value, and we have policies that will not accumulate a cash value. So more likely than not, what that insurance agent was talking to you about is the policy that would have accumulated a cash value. So you're young, you're in your 20s, you start this insurance. By the time you reach 40, which is like 20 years down the line, whatever cash value, based on the nature of the policy, whatever cash value could have been accessible to you then, right? So it can also be used as a saving component. There is actually savings on it. So sometimes you start the insurance at a younger age, and then by the time you reach 40, you probably now looking to own a home or something like that. And you realize your insurance policy has $50,000, $60,000 accumulated on it. Some persons take those funds and as an injection into purchasing a home. Right? So there are a lot of benefits to having life insurance. I think a lot of people just have a misconception. They may have heard things before that insurance is negative. But if you really get educated properly on insurance, I tell you, you would run and get it.
Okay. In terms of the cash value versus non-cash value, just on general terms, is there like a main difference with respect to how much you actually pay for it? So I'm supposing that the cash value one is much more expensive.
It is more expensive. So you see, it a lot of it depends on what you're looking for. Generally, the policy, the life insurance policy that does not accumulate a cash value is called term insurance. It's for a specific term. So I want to take out an insurance for 30 years. That's the term of the insurance. This policy is usually inexpensive. It's actually the cheapest form of life insurance. And really and truly, what you're paying for is what we call coverage. So I am insured for $200,000. And if I die within that 30-year period, my family gets $200,000. There is no cash value accumulated on it. The challenge that many people have with term insurance is that if they're alive at the end of the 30-year period and there is no cash for them to get back, they get very upset. Look how much money I spend. They pull out the calculator and they calculate the premium by 12 months, by 30 years, and they show it to you and you are saying to me, I'm not getting back. But if you had understood what you purchased, there would be no expectation to get a cash value because term policies do not carry a cash value.
So that's pretty important because and the other thing I was coming to with respect to that particular kind of insurance, you take out an insurance, life insurance in particular, and you say, well, okay, this is for 30-40 years, and as you said, you're alive after 30-40 years, then all of your coverage gone, you have nothing to get, no family member has anything to get. So is there now is it that people have to choose longer terms depending on how young you are? Because of course, if you are ill, you may not necessarily qualify to access, or you may have a much higher premium. So how does the average person work around that? Because certainly nobody wants to buy insurance and then you're still alive. And then, as you say, all the money went into the premiums and you're not seeing anything back. That's a hard one to swallow.
It may be a hard one to swallow. But interestingly, when you sit as an insurance agent, if you sit with a client and do a very thorough interview with them, you would be surprised that persons have an understanding, if you can explain it properly, an understanding of there is a time and a place to buy term insurance. There is a time and a place for it. Number one, it gives you more coverage at a reduced cost or a lesser cost compared to whole life or universal life policies, which are also life insurance policies. But because they carry the cash value component, they are more expensive. So when a person buys a term insurance, once they understand that they are purchasing this strictly as coverage in the event of their death, that at least the family members have funds coming in. Because the reality of life is when a breadwinner passes, most families experience some form of financial hardship.
Yes.
That's a fact, right? So one of the ways now, sometimes too, if we work with somebody's budget, your budget may not allow you to purchase a universal life or a whole life policy, but it might allow you to purchase a term policy because it's cheaper, right? So the selling point would be here what? At this point in your life, based on your budget, based on your expenses, you can't probably afford to get the amount of coverage that you need at the price. Right. So let us look at doing the term insurance. So the term insurance would give you the amount of coverage you need, but at a lesser price. You can afford it. And then when your financial situation improves, you can convert that term insurance to one that accumulates cash value. So you have that option to convert.
Let's go now to whole life insurance. And I'm watching the time, and I'm thinking we're definitely going to have 2 more podcast episodes because life insurance is getting pretty interesting, right? The term insurance, as you said, specific term, you have to be
Mhm.
strategic, you have to understand what you're getting into. And of course,
Right.
it's a more affordable option depending on what your
Definitely.
situation is. So let's talk about whole life insurance. Explain this. And is it that all whole life insurance has cash value?
Yes. So when we're talking whole life insurance, we're talking policies that build a cash value. Whole life universal life policies, they build a cash value. So of course, right away they're more expensive, right? But the thing is, most of the, let us talk about universal life. Universal life policy is a type of policy that it builds cash value, but it gives flexibility. And depending on which company you're with, all the companies basically have the core of universal. But of course, because we now have to market to different people, some companies may add a little benefit here, do a little, just to differentiate your product from company B's product. But the basic concept of universal life insurance is it's insurance that builds cash value, but it gives you flexibility of payment. So one of the things that most of us would relate to now is the pandemic. You bought a policy, a universal life insurance policy in 2010. You've been paying every month. So you have a cash value that would have accumulated over the years. And then, bam, in 2020, with the shutdown, you came and you lost your work. An individual like that who has a universal policy started in 2010 with a cash value, this person can stop paying the insurance, but remain covered. And the insurance company is obligated, contracted, that if this person should die, let's say they had died in 2020, and they had not paid the insurance for 6 months because they were not working, once the cash value that had accumulated was sufficient to pay the charges associated with keeping you insured, then you were insured and the company had a responsibility to honor a claim brought in by a beneficiary. So the flexibility of payment. So in some companies, it's called a premium holiday. Again, it's all about marketing, right? In some companies, we just allow you an extended grace period. So depending on the company, you would hear a different term. But the concept is it gives you flexibility of payment. And that works well because as life changes, sometimes you never know what situation you can end up in. Nobody thought there would be a 2-year pandemic going on how many years now, right? But for many persons, they were happy to know that because they had universal life insurance policies, they were able to experience non-payment or grace period or premium holiday, whatever the company calls it. And that period that you can really qualify for non-payment totally depends on the amount of cash value that has accumulated on the policy. A major difference, though, between universal life and term is that with term policies, you don't have that flexibility.
Right.
Because there's no cash accumulating on it.
Gotcha. So let me going back to the term policy option, and I'm going back to this because of affordability, and of course in the space that we are in, most people may look for an affordable option.
That's right.
So is it that after a particular age, potential people to be insured are asked to submit to a health check? How do you determine if I am 50, right, or even 65? Right. Let's say, because we know that we have long life in Tobago. That's right. We have an aging population. So I'm 65, I'm retiring from the public service or wherever. And of course, you recognize that, listen, the pension from the national insurance, that is a waste of time. You can't do anything with that. That could barely pay your rent if you're renting or your mortgage. Right. and you want to be able to, you're in fairly good health, but of course, you know, or you're expecting to live a certain period of time. Can I go and say, I'd like a term insurance at 65 years old? What does the insurance agent say to me?
Of course. Yes, you can get insurance.
And you can have the option of any term, 30 years.
Well, the thing is, you're already 65, right? So again, company policies, depending on the company that you walk into, right? So you may have a company that says you can get a term to age 75, a term to age 85, a term to age 100. At that point in time, when the person applies, the process is called underwriting. And this really is just the assessment of the information that is provided to the insurance company. They may send you to a doctor to get medical reports and so forth. They assess all of it. And once the company decides to accept your risk and you pay, bam, you have insurance. Yeah. And you are now insured either if your term was to 75 or to 85 to 100. Once you are paying your premium, be it monthly, quarterly, whatever mode that you would have chosen, once you are paying your premiums, you are covered.
Right. Okay. All right. This is very, very interesting, and it may just be an option that a lot of the people who are hitting retirement may want to consider.
Correct.
You know,
because
yeah, go ahead.
Because sometimes the thing about life insurance, as the first thing you would have said is you thought is about children. Sometimes when people get to the age of 65, even though many of them don't have children depending on them, they love the grandchildren so much. And it's like, oh my gosh, I want to be able to leave something for the grandbabies.
Yeah.
And one of the ways to do that via legacy, a financial legacy, because not everybody in this lifetime is able to have a house or houses and the assets to say, I'm passing this on as a legacy to my family.
Yeah.
Life insurance is one of the best ways to create that legacy, a financial legacy, because the one thing we're certain of is that death will occur.
Yeah, that's exactly what I was thinking about, because then I started thinking about the reality in Tobago and the Caribbean, where the average person, yes, you may be able to provide for your children, but in terms of really building legacy and starting that whole journey of wealth creation and maintaining that, this is an excellent option, really, for those who are so interested to say, well, okay, you see my grandchildren. I have a thing that I like to say in our space, in our in the region, you know, these post-colonial spaces, it seems as if because of the history, most of us are starting from scratch. Every generation. I started from scratch. My daughter started from scratch. My mother started from scratch. Her mother started from scratch. You know, and it just seems as if everybody has to build, you know, from scratch. Some people try to pass on a legacy, but I think we're still probably in the minority in terms of families actually building. So this may be, you know, one option in terms of leaving something for your grandchildren or your great-grandchildren, especially when you don't have land, you know, when you don't own land, it might be an option. It might be an option. Now, this is very, very interesting. As we let me see if I could squeeze in maybe just one more as we're here with a little bit more time left. Because we just spoke about people who hit retirement, let's go to annuity and pension plans.
Right.
Explain to me what they are and whether or not there's a difference between an annuity and a pension plan.
So annuity pension, that definitely talks about retirement planning. And it is so important to plan for your retirement. So many persons just live, they just live without thinking about planning for their retirement. Very sadly as well, many persons somehow think that it's the government's responsibility to take care of their retirement. So you would hear them say, yeah, I get a pension from the government. And one of the things that I would do when I chat with people and they tell me that is the government no longer has a pension plan. It's a senior citizen grant.
Yes, which is
And
not automatic.
Correct. A person needs to qualify to receive it. So don't feel that because I work government all the days of my life, that I automatically would get the senior citizen grant. And as such, when you look at it that way, it puts you in a place of saying, here what? Let me plan for my retirement. I can have an annuity plan whereby while I am working, I am contributing to it. And while I contributed, it's growing and growing. So by the time I reach retirement, at least I have a nest egg there, right? Now, the government of Trinidad and Tobago has done something absolutely fantastic for those of us who are working now in terms of helping us to prepare for retirement. And that is for persons who have what is called a registered annuity plan with the Board of Inland Revenue. It's registered with the Board of Inland Revenue. We are entitled to a 25% tax deduction annually based on the amount we contribute to this registered annuity. What that means in simple language, you have a pension plan, and for the year you contributed $1,000. The government gives you a tax deduction of $250, simply meaning your tax for the year is reduced by 25% based on how much you contributed to the annuity. And that is the government saying, here what? We are interested in you planning for your retirement, and we are going to encourage you and help you by giving you this benefit while you are working. Because no government can guarantee its citizens that when they reach the age to retire, that the country can afford to pay you your retirement. And I hope people are listening to the nuggets, the stories coming out from National Insurance. I hope people are listening, because there's a lot of uncertainty in terms of if, how, what, when.
That's exactly the point of me wanting to discuss the pension planning and the annuity, because for some years now, it's not even now, for some years now, the national insurance people have come out and said, listen, we may be sustainable, yes, but the funds are drying up. The injections coming in, the payments coming in are not enough, and the payments going out are increasing. Most recently, I think they're at 5 point something million or billion in terms of payout, but the what's coming into them, it's 4 point something, right? So you're definitely already in a deficit now. So one thing I wanted to touch on as well, because for us in the society here, especially in Tobago, many of us may have started an annuity / pension plan when we were younger. Sometimes, you know, that got paid up, you didn't continue, that kind of thing. And you see a lot of older people now, maybe because of technology, increase in technology and accessibility, really and truly coming to terms with the fact that, listen, I'm going to be retired soon and I don't have any funds. Correct. You understand? So correct. In terms of even, is there an age barrier by law or by contractual obligations for the companies when one can start a pension plan, start an annuity? Yeah?
You know, good retirement planning, proper retirement planning would suggest that as soon as you start to work, start putting aside for your retirement. Why? Money multiplies significantly over time. So when a person who is 23, just came out of university, started your first job, You don't have a lot of expenses because you're now starting off in life financially. That is the best time to start saving toward your retirement. And sometimes they look at you like crazy as an insurance person. They look at you like, I now start to work, you're telling me about retirement? Yes. Because I would always say, I remember in local terms, just the other day, I was in school. I'm at a stage now where I'm seeing retirement looking a little closer.
Correct.
Right? So time passes quickly. And the thing is, life keeps happening. There are so many things that will happen between 23 and 50, if God spare your life, that you didn't expect. But a lot of those things have a financial component to them. So if you keep delaying and delaying and delaying, time is passing and passing and passing. And by the time you catch yourself, wow, I'm 45, and kind of scrambling to see what you could put together for your retirement. So if you're in a position too, from the time you start to work, start saving toward your retirement. And the good thing about it is, hopefully, your situation would improve as years go by. So even if you started off at $200, couple of years down the line, do an incremental increase. Another few years down the line, keep doing increases, because the other factor with retirement planning is inflation.
Yes.
Inflation is real.
Yeah.
So you can't start with this $200 at 23, and by age 40, you still paying $200.
Yeah, it's important. It's important to make that highlight as well, because when you listen to us here in the Caribbean, especially, people like to compare. My parents made it with $3,000 a month, and they never think about inflation. So when you mention inflation, for those listening to this podcast episode on understanding insurance, inflation has to do a lot with the value of the money in the time that you're living in. If you're making $3,000 a month now, what you can do with $3,000 now, you will not be able to do with that $3,000 in 5 years' time, or even 10 years' time. One way I like to describe it, when I was in primary school, one pack of Big Cricks salt crackers was $5, right? My aunt and they remember it when it was cheaper. I remember $5. And I see now that before they got rid of it in that big pack, it got close to about $15 in a short space of time. I think like in a 15-year period at that time. You look at the price of bread, that's what inflation is. But still, going back to the older people, when you're younger, you have the opportunity to invest in your pension, to plan for your retirement. But if you're older, is it that they have really, really limited options? Kind of older person, let's say you're 55, 56, 57, somewhere they're getting closer. Do those people have the option to maybe take contract gratuity or some sort of lump sum that they may come into and put it towards any sort of pension plan that gives them a decent payout?
Yes, you see, sometimes some people blossom financially in the latter part of life. And even if somebody is in their 50s, understanding though that you obviously cannot be putting $200 a pension, it just doesn't make sense. But you may have blossomed into some aspect of life that allows you to put injections of a large sum of money into this annuity, because what you want as well with an annuity is the ability to have a guaranteed monthly income. Guaranteed. That's what you want. So if this person comes into a lot of money at that age, they can put it in. The company that I work for, we actually have single premium, which caters for those types of situations, right? Where somebody comes into a large windfall of money, and they want to take a portion of it and put it into an annuity, so that and they leave it there, and then they say, okay, by the time I'm 68 or so, let me get this as a monthly pension for the rest of my life. Right?
But what is that realistic figure? Is it that somebody has to have $50,000? Is it that in terms of a single payment, do you need $100,000? Do you need $20,000? With 10,000, are we talking TT dollars here? Would that work? Is there an option to put $2,000 per month if you just got a fancy contract from the THA and maybe you're guaranteed to work for 8 years again? How does it work in terms of actual figures in Tobago?
And I'm glad you're laughing here, because the reality of the cost of living for us is our cost of living is fairly high, right? And I can tell you off the top of my head, if you accumulate $50,000 by the time you're ready to retire, that is tough to live on. That doesn't give you a proper income. It doesn't give you a proper monthly income. I can tell you that may not even give you, when the thing is, when the actuarial persons work out their calculations of paying you over a period of time and so forth, accumulating $50,000 does not give you a pension of $500 a month.
Correct.
So that $500, we can't live on that. We can't live on $500. So, which is why when we do in retirement planning, persons need to look at accumulating a large amount of money. The other thing that I would share with persons as well, particularly for retirement planning, is to look at sources of income. So you don't want to be retired and dependent on one source of income. The other day, very recently, this month, those pension checks that were stolen, I think it was Sandy Grandy at the post office. And quite a number of pensioners were affected by it. And the sad reality is, for many of them, that is their only source of income. So when a situation like that happens, you realize how vulnerable some people are, or some people not proper planning. No, it's not all of them, right? They didn't do proper planning. We can't lump all of them into one basket and say they didn't do proper planning. But for some of them, it would be a situation of improper planning that has put them in this position. Sometimes some people have been planning all along very, very well, you know, and life happens. Incident that nobody thought would happen. And bam, you are now thrown into a very depressed situation. It wasn't planned, but it happened, right? So do not depend on one source of income when you are doing your retirement planning.
That's, I don't know, the time has flown by. And we haven't even scratched the surface. So many questions to ask about this. So I definitely have to ask you to do some more episodes with me as we go along.
That would be fine.
I don't know, because we didn't get to young people annuity yet. You see, we focused on those people. And I think I asked that because, you know, you just kind of, with NIS, I've been watching the NIS situation for some years. And I remember when I started talking about it publicly, people, you know, were wondering, well, why are you talking about that? You know, that the government have to give me some money. You know, even when I was saying things like, listen, the senior citizens grant, as you rightfully pointed out before, that thing is no longer a right. It is a privilege, and they are going to assess you. And the slightest little things in terms of additional income may put you above somebody who really wants it more. And you miss out. But I don't know, in our space, you're seeing a lot of older people hitting retirement age, and they're like a fish out of water. And I find that to be very, very sad. So I suppose maybe for the younger generations listening, they may want to blend having, you know, adequate or whatever kind of strategic life insurance that they may want to invest in, and as well as planning for your pension. One thing I wanted to ask about the pension before we wrap this particular episode: can those pension plans, is there the same grace period extended similarly to the life? Let's say our pension plans having cash values? Can you stop, if you stop working, your contract ended, etc., can you stop paying and your pension plan still remains workable for you?
Yes, for most of the companies that I know, most of the companies, you have definitely extended grace period. The company that I would represent, once a person has an accumulation, and let's say you have a pension, so sometimes the same example, 23, you just got your first degree and you started your retirement planning. And by 28, you say, here what, I want to go into my master's, so I'm not going to be working for the next 2 years. You can stop paying that retirement plan, go get your master's, and then when you're finished and you start back to work, you resume payment, right? So that as I said, I've talked about the company that I work for. I know that's how we do it.
How long ago this came into being?
I have been here a long time.
Okay.
And it's always been like that, particularly with your retirement plan, right? You are allowed to stop the payments. Just an example, 5 years you've been contributing, you have a certain amount of money accumulated, you go, you do your master's, and then you come back and you resume payments, and life goes on. Okay.
So that's, and I suppose these are the things, the thing about it is that maybe there needs to be some sort of mandate on the insurance agents to explain these things, because many times you are the one seeking insurance unless you're pretty experienced or you have really, really good support in terms of senior people behind you. You don't know the questions to ask. You know, you don't think about some of these things.
That's right.
And so things kind of happen. I mean, we know capitalism, how that works. Some people, it may not be in their interest to tell you, well, okay, these are the options. But I think that in a depressed space like ours in the region, it would be important that people know that they have these options. So then, because you feel more comfortable without the burden being there.
And based on what you're saying, in terms of you wish people knew more, I can tell you that the Central Bank of Trinidad and Tobago has now placed all financial advisors, financial brokers, insurance agents. We are now mandated to have continuous educational assessment, progression, development. And one of the aims is so that we can adequately advise our clients, our prospects on these things. And for those who cause breach, these financial advisors who cause breach, the penalties from the central bank are pretty hefty, right? Pretty hefty. And I think that can only augur well for the general public in terms of the type of information that comes from insurance salespersons, brokers, other financial advisors.
All right, that's a good way. That's a good way for us to wrap up. Thank you very much, Jessel Alexander. I think I've learned a lot. I hear wondering, well, why I didn't meet you 20-something years ago, because I've been through it all when it comes to insurance, and I am very much on the side of those people who don't want to hear anything about insurance. But
no, insurance is a good thing to have.
Well, it's a matter of life and death for some of us. That's the challenge. You recognize. To me, I've started the conversation again because you recognize, especially as you get older and you have responsibilities. If you're serious about your financial planning and your management of your life and your retirement, then you kind of have to take these things into consideration.
That's right.
And like I say, hopefully we kind of put a dent in that whole thing about each generation starting from scratch. So thank you again. We definitely have to come back because we have to talk about health insurance and critical health.
You know my number. Just call.
Thank you very much.
This was wonderful. Thank you.
All right. Listen, guys, you've been listening to this podcast episode because we want you to, after you get all the information, you must be able to handle your business.
Handle Your Business, a weekly podcast discussing a little of this and a little of that. Handle Your Business appropriately blends serious topics with fun topics, all in an effort to help you have a good or better life. So join me, your host, Lady Lashley, and some amazing guests every Sunday at 5 p.m. to explore everything from financial management to dealing with relationship challenges. Put it in your calendar every Sunday from 5 p.m. Tune in to Handle Your Business for a very helpful half hour to get you ready for the week ahead. For more details, follow at Lady Lashley TT on Instagram and Facebook. Handle Your Business.